Hello and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today is Monday, so it's Macro Monday here at Container Exchange. Let me briefly share my screen and give you a little bit of guidance what's happening this week. Overall, we've got some key economic data coming in. In general, consensus shows or forecast tells us that we'll have positive indicators in general, but with slowing dynamic speed, I would say. So Monday, later today, we'll have some key economic data coming in from China. For example, the GDP year-on-year growth is expected to rebound from 4.5% to 7.3%. So this is always year-on-year growth, but other indicators are in generally slowing. So retail sales is reducing from 12.7% to 3.2%, again, year-on-year growth. On Tuesday, then that story continues. We'll have retail data from the US, in general, positive growth, but at slowing speed, while at the same time, business inventories are increasing as well. And we've talked a lot about inventories over the past couple of weeks and its impact on container volumes or demand for shipping capacity. So increasing inventories in general is bad news for demand for shipping capacity in the coming weeks and months. Then on Wednesday, we'll have inflation rate data, especially from Europe coming in. So UK and the Euro area in particular, slowing in general. So approaching a more manageable level, but still a far cry from the 2% target range. In the UK, that means 8.2% year-on-year, and in the Euro area, 5.5%. Apart from that, two interesting press releases or press notes that I read over the weekend. Number one, ZIM expects now an EBIT loss of up to $500 million for the full year 2023 in a revised guidance. And that just comes weeks after a guidance of 100 to 500 million EBIT profit that ZIM gave out a couple of weeks ago. And they do that citing soft rates and sort of the expectation of an uptick in rates for the second half of the year went away. So a little bit of reduction in optimism or a rise of pessimism a little bit here on the liner side. I don't think that's a big surprise. We talked a lot about supply-demand imbalances, especially on the vessel capacity and container fleet size. So significant overcapacity in the market and just pushes rates down to variable costs. And then press release or press news item number two that I found very interesting. Key liners are announcing rate hikes on ex-India, particularly to Europe. So CMA, Hapag, and MSC have warned their customers of impending rate rises. Depending on the stretch, they increase their rates by 2 to 3x, so 200 to 300%, actually 100 to 200% increase. Of course, it's questionable whether these rate hikes will hold in the face of that overcapacity that we just talked about, and that pushes ZIM into a negative guidance territory. That's it from us from today. Just stop sharing my screen. We're in Shanghai this week at the Intermodal Trade Show. It starts on Wednesday through Friday. If you're around, do come by to our stand C90. I'm very much looking forward to seeing you there. Take care.